Hello and welcome to another update video about the DXY. The DXY has been following the forecasted structure nicely so far and still has plenty of space in the resistance area for this wave 2 corrective rally if it needs the space. Okay, so the idea, if I zoom out a little bit, and that's completely unchanged. I mean, this wave count so far has not changed in months. Probably not since July or so, when the idea was that maybe already here we were breaking down, but then it formed this flat structure. But since then, this wave count hasn't changed. So the idea is that a larger degree third wave topped here in September 22. And then since then, we've been tracking this ABC structure to the downside. To be honest, the whole count actually hasn't changed since October 22. What has changed only is, that the idea of an ABC structure just got extended here, the B wave. But overall, the idea that this is a larger ABC that should take us into the low $90 region has been followed since, basically sort of October, November 22. So it's moving nicely according to the projection. But also it can be quite frustrating that here, since basically January, February last year, the market really, looking at the big picture, has only been moving sideways. That's very characteristic of a so-called sideways correction, which is a flat structure. A flat structure, which is characterized by an A wave in a corrective structure, an overshooting B wave to the downside in a B wave here, and then a C wave. So that's typically a sideways correction. And we were waiting, after we could identify an A wave down, we were waiting for a 3-wave move up, and it completed somewhere here in October last year. And then obviously a 5-wave move down, which would be wave 1 of the C wave, that again should take us down into the low $90 region. And yeah, we've seen this 5-wave move down, and the idea was from down here that we would see a corrective rally in a wave 2, because such a C wave, which again should take us down into the low $90 region, probably in a larger A wave, which would then again lead to a larger B wave over the, where are we here? Over the coming years possibly, before we then completely move down. Maybe this is going to be a wave 4 low. We'll see. That's too early to say. But the idea is that we are moving down, first of all, into the low $90 region, and there is still the wave 2 to complete, the wave 3 to complete, the wave 4 to complete, the wave 5 to complete. And if it goes according to plan, even then, we are probably busy with this until the end of 2024, probably. Now, this wave 2 rally is likely going to be finished soon. Resistance is between, we already entered the resistance area, had an initial reaction here on the 5th of January. But the next level is at $103.96. Then we've got $104.75 and $105.88. Even though it doesn't necessarily go up that much. It could go still a little higher. We can track here this wave 2 rally as an A wave to the upside, in line with the last update. B wave, the B wave, however, did not go down a little lower. Yes, the price, or the DXY basically touched the support zone, but didn't provide a clear ABC structure itself. So I'm thinking maybe it simply formed a flat structure, A wave down, or even here, A, B, C, but that would be a zigzag. Truncated though, it's a bit of a strange structure. It might have formed a triangle, which it can be counted as a triangle as well. So from the A wave top to the B wave, it's just quite helpful then to determine where exactly it ended in terms of targets, right? Just not very clear if it was a triangle or some kind of a more exotic corrective structure. As a triangle, this could have been an A wave, B wave, C, D, E, probably here, and I have to change something. Come on. Yeah, it doesn't really look right. It's valid, but from a proportional point of view, yeah, doesn't really look right. But it's not so important. But corrections can sometimes get quite exotic structures. If this was a triangle, then this is now a C wave to the upside, and we can calculate a target by taking the length of the A wave. Then we go to the low of the B wave, which would have to be the end of this triangle there. Even though, I mean, it doesn't make a great difference where exactly I put the low point there, but even if it's there at the end of the E wave, it could still stretch a little higher because typically a common target is the 100% extension level. And that's pretty much up here around $104. Oops. $104.75. So good overlap with the golden ratio level there. But also the 61.8 extension, that could be technically enough. That's at around $104 together with a 50% retracement. So in summary, these are the next two levels to watch there. Basically $103.80, $104, and then the $104.75 level. These are going to be key. And okay, what would be a first level that needs to break to determine that the uptrend is over? So for me, it would be the 50% FIB level, and it would take a sustained break below $102.89 to suggest that this C wave rally is over. Okay, that's my update about that DXY. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then check out the S&P 500 and stocks service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.